Most people use AI to confirm what they already believe. I did the opposite. I gave Claude my entire investment strategy. I told it to find some key problems, and it did. Because let's be honest, a lot of times we don't get honest feedback on how we invest. We read articles that are written by people who agree with us. We watch channels that validate the opinions we already have. And even like the AI we use can over time learn your thoughts and opinions and tailor its response. So I took deliberate action to make sure it wouldn't tailor that response, to make sure it would give me an unbiased critique of my actual strategy. So in this video today, I'm going to show you exactly what it said and where I disagree. And at the end of the video, I'm going to show you exactly where my portfolio is actually at, the real numbers, so stay tuned for that. So first thing I did is I turned off memory. I didn't want Claude pulling anything from prior conversations that we talked about. I wanted no context, no prior conversations, clean slate. And so to actually do that, you just simply go to settings, you're gonna open the capability settings tab, and then you're gonna turn off search and reference chats and generate memory from chat history. So this basically just gives Claude no memory of previous conversations. It doesn't use any specific context that you have or instructions that you had in the past. So it's a clean slate. Now that that's done, I'm simply going to go open a new chat, and then I'm going to paste a prompt. So I made a prompt specifically for this. I'm going to read to you what the prompt says. It says, treat this conversation as starting from scratch. Don't reference any memory, projects, or prior conversations. Audit me like a stranger. Then it says, audit my investment strategy as a harsh, unbiased critic. Don't soften your language, assume I'm making a mistake, and prove it. Then from there, I basically explain my strategy. I say the asset I'm buying, the contributions, the account type, platform, the goal, my time horizon, and then my age. So I gave it general context. I didn't go too in depth, but I gave it the important stuff it needs to know. And then after I gave the strategy, I said, give me 3 biggest flaws in the strategy, ranked from most to least dangerous. At least one should be a blind spot, a flaw I probably haven't thought of. For each flaw, give me a short, punchy headline, 5 words max, a 1 to 3 sentence explanation for my specific situation, and then real numbers, where they apply, fees, drawdown, tax implications, all that. Then I said no caveats, no consult a financial advisor. This is just so it doesn't give me the whole, I'm not a financial advisor, I can't answer your questions type of answer, because sometimes they have guardrails that get really annoying. So now I'm going to actually just enter the prompt. While we're waiting for that, I also want to say I have the exact prompt in the description. So if you want to test this against your own strategy, obviously you have to fill it out with your specifications, but fill it out, see what it says, maybe you learn something. It's tailored to hopefully give you some insight, so definitely worth a try. In the description if you need it. Okay, it took a minute, but now we have the results. It came back with 3 different critiques. I'm going to go through them one by one. Let's get into it. So the first critique, TFSA losses are permanent. So this is one I genuinely hadn't considered. And the argument is basically this, that Bitcoin has basically in just the last decade had over 75% drawdowns. So essentially with the 10K allocation, let's say it gets cut in half, and that's not hypothetical, that's proven by what it has done in history, is that I don't just lose 5K in capital losses, but I also lose 5K in contribution room. So if I invest 10K and then I lose 5K, then I can only withdraw 5K, meaning that other 5K that I deposited that got lost cannot be withdrawn, meaning it is no longer replenishing my contribution room. So in a sense, I've essentially permanently lost contribution room. So one of Claude's points with this first critique is that I've essentially bought one of the most volatile assets on the menu in a wrapper that punishes losses the hardest. And it's basically saying like, that's mathematically backwards. It's the opposite. You shouldn't be doing that. Now, here's where I have to be careful, because the audit is almost right, but not quite. The TFSA room only gets destroyed if I sell. If I panic when things get low and then I decide to sell, I will lose that room permanently. The contribution room is gone. But if I hold through the downside, I keep DCAing weekly while prices are going down, the contribution room is never destroyed. The position is just down. The unrealized loss is still unrealized. So this critique is valid and it's a genuinely good critique, but the critique only applies if I behave irrationally. If I sell at the bottom, panic when I'm down, if I lock in those losses, that's when the math becomes catastrophic. But that's exactly what this strategy is built to prevent. Weekly DCAs force me to keep buying even when it's painful. Limit orders ladder into drawdowns. So when things get painful, my strategy is actually built for those times. It's like my whole strategy is anti-panic infrastructure. So while the critique is correct, I have engineered against that. But I will give credit to Claude, that is a very sharp point. On to the next critique. So critique number 2, limit orders are dead capital. So Claude pointed out something that's just true, that 60% of all of my money in this 10K portfolio is dedicated to limit orders. Now, it essentially says that this is not being used. It's, price has rallied up to 80K and some of my limit orders are in, the lowest one is 45K to around 50K, which as price keeps getting further away, essentially it's like placing limit orders where it may never hit, and it's essentially just capital that's doing nothing, right? So it basically calls me out for betting that we're gonna have a large drop from here. It's basically saying that the limit orders are me trying to time a certain dip, or I'm guessing a certain price that it's gonna go to. So the two strategies are incoherent, where if my DCA strategy is the key idea where I'm not worried about prices, then just go with the DCA, and then the limit orders are basically a bet that price is gonna go a certain direction, so why don't I just double down on that bet? I think that's kind of what it's getting at. And here's where maybe I could have been more specific or given Claude a bit more information. But I think the key thing that it missed with this idea is that these are not necessarily incoherent strategies. It's just I'm covering all bases. If price just goes up from here, obviously it would have been best if I just buy right now and then it goes straight up. But I don't know that. So I'm buying DCAs so that I'm never out of the market, but I'm always steady accumulating into the market. And the limit orders are there for the counter scenario where things just fall into way lower levels. We have that 70% bear market, and then I'm prepared for it. And the one thing it kind of mentions is that my limit orders are earning nothing. They're essentially just sitting there. But to summarize what I'm actually doing is I'm using the DCAs as the base strategy. That's the floor, the infrastructure of what I'm doing. And then the limit orders are insurance. They're making sure that I don't miss these lower levels, or if it gets to those lower levels, I panic and don't buy. It's set, forget, and I'm good. So once again, Claude makes a fairly good point, something I definitely got to consider. But the way I build things is with all of this kind of in mind already. So now we'll go straight on to the third critique. But right before we do that, I want to mention that I run all of my trades through Wealthsimple. That's the brokerage I use. If you're looking to get into investing or start your investing journey and you're Canadian, seriously suggest Wealthsimple. The link is in the description. And then if you're Bitcoin native and you want to store your own Bitcoin, have the actual rights to the Bitcoin, I have a link to Trezor down below. That's where you can cold storage your Bitcoin. So check out those links if you're interested. Now let's get on to critique number 3. No exit, no goal. This one, I gotta admit, Claude is just right. I'm gonna give it its flowers for this. I don't have an exit, actually. This is something I haven't gotten to. I haven't thought through much. Obviously, the goal is 100K, but it strikes a very important point that, and it actually ran the math for this, is that if all my limit orders hit and I get X amount of shares, for me to hit 100K from the shares that I've accumulated through those limit orders, Bitcoin would have to be somewhere near 300,000 Canadian, which that's possible. But Claude's actual point is, even though it's possible, that doesn't mean that I'm gonna catch that exit correctly. So it made a clear distinction about what's possible and what's actually common or likely. And it's basically saying that it's possible for me to hit that 100K, but the likelihood I actually sell when it gets to that point, it's not as guaranteed, because in Bitcoin's history, we've seen periods of time where it does a 4x, but it only reaches that high peak for an hour at a time or even minutes in some cases. So for me to actually hit this 100K, if Bitcoin goes to a million tomorrow night, I will for sure hit the 100K. But if I'm sleeping and it hits that price and then comes down, I'm gonna miss that opportunity. So I gotta give full credit where it's due. I have not set this up yet, and this is actually something I need to think through is how do I exit? How do I solidify that 100K? Because it's one thing where the number just hits, but it's another thing to actually take that profit and get out of the position. So I actually have some homework to do at this point. I think I'll spend the next week figuring out where those sell orders will be. Maybe that'll be the next video, is how I'll actually take profit, how I make that decision, and I'll share it with you guys, because that's how this series goes, is I share every decision, everything I learn, everything I do with you guys. So yeah, very, very interesting audit. I gotta say, I definitely learned a good bit. I am happy that I also planned ahead of time for what critiques it actually gave. So it's confirmation that I am fairly well prepared, but in other aspects, I am completely unprepared. So this was a good little experiment. Now, the thing that I do every episode is I show my actual portfolio and how it's doing. So right before we get into the actual portfolio, I just want to ask a big favor. If you enjoy the channel, you enjoy the series, please subscribe, follow along. I'm going to be doing these every week. I make a video every Monday, so you can kind of follow along and see what I'm actually doing with my strategy. And another favor I'd like to ask, just if you enjoyed the video, leave a like, comment what you're doing with your strategy. If you tested out the prompt, tell me how it goes, what it critiqued you on, and just overall, as much engagement helps. I appreciate all of it. So if you could do that for me, I greatly appreciate it. Now let's get on to the portfolio. So here we are in the actual dashboard. Currently, we're up $268.72. I have around 2,500 currently invested into Bitcoin, into the Bitcoin ETF. And then we have 1,500 in cash, another 6,000 in limit orders, and nothing really has changed. My DCA hits every Monday. So that's where the portfolio is at. Hopefully you guys enjoyed this video. Hopefully you learned something. Thank you all for watching, and I will see you in the next one. Peace.